the building space, why I've switched is because doing an apartment building is like doing 10 duplex conversions at the same time.
Uh-huh. All right. Thanks for tuning into the Highest and Best Use Real Estate podcast, where we talk about techniques to optimize your land, structure, skill sets, and time, as well as highest and best use principles to make your business more profitable, productive, and efficient. I'm your host, Ryan Carr, reminding you that good deals are found, great deals are created. And today, the one and only Mr. Quentin D'Souza is on the show. Quentin, thanks for being here.
Oh, thank you.
I'm really excited about this. Quentin's a good friend of mine. He has a portfolio of hundreds and hundreds and hundreds of units. And he's also the Chief Education Officer at Durham REI. So I'm excited.
Thanks for having me, Ryan. I appreciate it.
What do you think's happening to the basement apartment right now? Is the days of the basement apartment, is that gone by the wayside? All of those have been developed. We're running out of supply. We're running out of old basements. We're running out of grandma's bungalows with the blue toilets and the purple carpets. Are we running out of those basements and we have to go to coach houses, or do you think there's still opportunity?
It all depends on price point, but over time, what happens, like most strategies, is you get pushed out of an area because of price point, right? 2008, I could be doing duplex conversions in Pickering because the price point of buying a property in Pickering, it was higher than Oshawa. Like maybe I was buying for 400, right? And I was, 50 to convert in it for 450. Cash flow numbers were pretty good at the time. Maybe after the refinance, I would make some money. But then, over time it gets pushed out, and we get pushed out into further because the price point changes.
Yes.
Right. And one way to compensate that is to densify a property, right? So adding a garden suite is densifying the property.
Yep. And
by adding that additional density, we've increased the ability to make this project make sense, right? In that 1 to 4
because your cash flow goes back up.
Cash flow goes back up,
right?
Yeah.
Interesting.
And so it makes it work.
Yes.
Now, the building space, why I've switched is because doing an apartment building is like doing 10 duplex conversions at the same time. It just takes me longer to do it.
Yes.
I never had the crew that you have when it comes to construction. I always subcontracted, maybe acted as the project manager, sometimes have general contractor. Okay. But I could maybe do 3 or 4 conversions in a year.
Yep.
Right. That would be the maximum I
conversions of basements.
Yeah. So take a detached house, buy it at a price, do the conversion, right? Get the conversion done, work on my next one, maybe have 2 going at the same time. But, maybe I'll get 3 or 4 done in a year.
Yeah.
What I found is that I can do the same thing in an apartment building with a greater scale. It just takes me 3 years to do it. So instead of doing 12 duplexes, right, or 10 to 12 duplexes, I do one building and I accomplish the same thing. I'm able to pull out, let's say in order to get my 23 unit building done, I got to raise 1.5 million.
Yep.
Right. And then for each duplex I would have done, I would have had to raise 150,000 each.
You're not the same.
Not the same,
yeah.
Right? Except it's easier because I can do it in one building.
Less transactions, right?
And then I can focus on the one building, and then I can carry out the business plan.
Yep.
And what you need to look at is try to look at your obstacle as an opportunity, right? And I don't think people do that enough. So what is the obstacle in Ontario that everybody complains about? Rent control.
Yeah.
Right?
That's the gateway drug.
Right. Rent control.
Yeah.
Rent control is the problem. Rent control, great. So how do I use it as an opportunity? Well, when we're buying a building, we're looking for the difference between what market rent is and what the rent of the building is. And if we see that difference,
that's it.
That enables us to carry out our business plan. And as long as we can turn over units in those buildings, and we do it, I've written 2 books on property management.
Yeah.
We do it legally and we do it ethically, and we are able to get the building turned over, a number of units turned over. We're able to take those, that new rent, go back to the bank, get another loan, pay back our investors their initial funds, continue to own the asset. We don't sell buildings, right? We hold them. Right. And we just continue to refinance those buildings again and again.
Are you looking at ROI or return on equity? What's more important to you?
Oh, that's interesting. So return on equity, I looked at a lot on the 1 to 4 unit space.
Okay.
The problem with buildings isn't that. So what happens with
Problem with building? What do you mean?
So in 1 to 4 units, you're always stuck because of the comparative model of how appraisals work.
What did your neighbor sell for?
Yeah. Right. Comparative model is exactly that. And oftentimes, based on your debt coverage ratio and the comparison model, you have tons of equity that's locked in the property.
Right.
Now, you can do second mortgages to access that equity. It's a pain in the butt, but you can access that equity. It's just not optimal. In an apartment building, it's based on net operating income, right? And your debt coverage ratio. And sometimes, depending on what type of financing you have, you can go up to 85% LTV as long as you have like a 1.2 DCR. And then what ends up happening, and this happens with buildings, you have to be more careful about pulling too much equity out of a building. So if you did end up selling, you don't have enough money in the building to pay for the capital
to cover it. Yeah.
Is that a benefit?
Yeah.
It is a benefit, right? Because that means you can take that equity that was in that building and then continue to work with it to buy new properties. Right. So my highest and best use now is looking at the rent roll and bringing the rent roll to highest and best use.
Finding those inefficiencies, saying, hey, this market, like it commands 1,800 for a 3-bed. I'm only paying 12.
Yeah.
What's going on here?
Yeah, and it's exactly what it is. And sometimes we're looking at buildings on the land where we have buildings as well.
Yeah.
Right. So I have a 23 unit in Coburg, for example. When we bought the units, the highest I think was like 1,350 or 1,400 maybe
in rent.
In rent.
Okay.
Right. And now those 2-bedroom units are renting for 1,850.
It's a big spread.
Right. And that's in like 2 years.
It's $500.
Right.
Did you say 1,850 to 1,350?
Let's say 1,400 to 1,850.
Okay.
Right. So 450 per unit spread.
Yeah.
Just on the increases, not on the existing rent roll that was there already. Right. On top of that, we could build 23 units beside the building.
So this is the one where you can develop behind it or beside it, or
no, we've got a bunch of those.
This whole man.
So,
we could talk for hours here. Holy smokes. Okay.
So this 23 unit, I went to the town and I said, look, I want to build this. And they said, yes, it meets all zoning. But we want a shadow study and we want a parking study. And we want, and the thing is, do you really want rental units?
Yeah.
Like I feel like there's that pushback. And when you look at the building, there's actually trees that are taller than the building beside it.
Yeah.
So if you did a shadow study, the trees would be higher than the building.
But the trees are green. They're okay.
But they're okay because they're green.
That's right.
Right?
That's right.
So like none of this makes sense.
Yeah.
We like, anyways, I could go on, but so that's an example. Another one we've got next beginning of August, we're closing on the 20 unit. We have already approval to do another 20 units, same 20 units on 50% of the land.
Wow.
So we still have the ability basically to go back, and after we've built those 20, perhaps build another 20 and then another 20.
Wow.
Right? So there's
40 more units.
Yeah. So
how big is this piece of land?
It's huge. Yeah. So and then
would that be like a stick frame building? Let's talk about it. Yeah, let's talk about it. So that particular development there. So if you build another 20 and another 20, you've got something that you bought for one price, and now you've got free dirt.
Yeah.
And then another piece of free dirt.
Yeah.
Right. Which means like the potential there would be huge.
Yeah. The reason why I don't want to talk about it, because like the annual ROI is like 40%.
Okay.
And it's so nobody is going to believe you.
Right.
Right. Like this is one of those ones that like
people will be like a scammer.
Scam.
Come on. If you're any better than 12, like no way.
Yeah, it doesn't make right. So like there's stuff like this that are out there, but it's not for everybody because it's a development project. It requires, time and effort, and there's risk because of the building component to it, material costs, all of that, but it's only half the land.
Yeah.
Right. So, and we're not even pricing in building the other like 40 units. Right. So there's tons of upside, but these are projects that are out there that, we've really like got the deal flow going. Comes back to the conversation that we had at the beginning. I need to refocus on how I do things. I need to connect with family offices or do a fund model.
Right.
And because that way we have we can take the funds and directly put them into projects.
So this would be highest and best use of capital.
Yeah, it would be.
Okay.
Yeah. For me, it would just be more efficient and also just help us to grow to an additional 125 million in maybe 2 years versus, taking 5 years to do the same thing. Right.
So what motivates you? Why?
I enjoy it. Like I don't like my buddy just bought a McLaren, Andrew, right? He's got a beautiful McLaren and he wanted me to get like the same McLaren as him.
I agree with you.
Yeah, you see?
I agree.
Yeah. So he wanted me to get that. And I was like, I love my truck. That's my thing. I'm not like this. So
remember how long it took you to buy that truck too?
Yeah.
You were like, like, would you have a van before? Did you get a van or?
Yeah, I had something. Yeah.
And finally you pulled up to one of the meetings and you're like, hey, look at my new truck. We're like, yeah, you did it.
It's not my, like, I'm not, that's not it. I enjoyed camping with my son. We did Machu Picchu together. We did a week and, we camped up the mountain and I like the experiences. I think the experiences for me are where it's at. That's what I enjoy. So you got to find out what kind of motivates you. I like watches. Watches is my thing. So I like watches.
What are you wearing today?
I've got a Rolex Submariner.
Wonderful.
Right? Yeah.
Very nice.
My nice Submariner on.
Cool. What's the James Bond watch? Seamaster? Omega Seamaster? Is it Omega?
I believe it's something like that. Yeah.
Sounds right.
Seamaster. Yeah. But, I enjoy things like that.
Yeah.
But I really enjoy taking a building and, converting it from making it worth 3 million to making it worth 5 million.
That's a good return on time.
Yeah.
Way better. How many duplexes would you have to do?
Exactly.
So
20, right? It just doesn't make sense to me anymore. And the duplexes were great. They're great for cash flow. They're great for being able to, quit your job or do something like that.
Yeah.
I think they're a great way to kind of get started. But I think if you want to create wealth, you want to be in the apartment building space. And it took me a while to understand that, doing a couple buildings. Like I did building down the street here, actually.
You did.
In Bowmanville.
You did? I don't want to talk about it.
Yeah. So we
metaphorically, I don't want to talk about it. We can talk about it. For the listeners, for what it's worth, I saw this building. I forget where I even found it. I think I found it online, like some ad or something. I found it online and it was 12 units, 13 units.
11 units.
11 units. Yeah. And I called the guy and it was a private sale. So I go to see this thing and I'm like, okay, looking around. And I didn't end up buying it because I didn't know enough. I didn't know enough at that time to recognize a multi-unit opportunity. I was very much in the single family duplex, space, construction. And when I walked through, I'm just like, this is a building and I'm doing some quick math. And I didn't realize how much the rents could jump and how that affected the building at that time. And then come to find out, was it 6 months later? I think you and I were having a coffee or something. You're like, I bought this building. I'm like, oh, tell me about it. And I'm like, frick, that's the same building I was in. What do you mean you bought that thing? And then you're like, the numbers are great. And you show me all these things. I'm like, oh, how did I not see that?
Yeah, we refinanced out our investors' money in a year. It was the fastest deal that I've ever done.
Anything else? Come on, just keep it coming. Just keep it coming. Shots fired.
I'm refinancing that building again this year. So we're working towards it. May actually release an additional 500K.
Oh my God,
equity.
That's great. Good for you. I'm happy for you.
But I mean, it's the power of buildings, right? And using that net operating income and the way that I'm doing things now versus how I did things before, and I still enjoy it, right? Yeah. I think I will do this for the next 20 years until I stop enjoying it.
Yeah.
There are aspects of the business that I don't like.
Like what?
Well, sometimes the property manager deals with a lot of the issues, but then, when it comes to the very end, it'll be me, right? Managing
the manager?
Well, it's kind of like, this is what we've got with this situation. It's going to go to the paralegal and that's what's going to happen with this particular situation. But, they may need some help. Right. And so I will step in and help as best as I can, give some direction as what to do. And so it's not my most favorite thing to do. I would rather be talking to potential partners and working on an acquisition.
Another building.
Yeah. Because that is really where my highest and best use is. or working on actually transitioning a building, taking out some of the problem tenants, and being able
do you negotiate the tenants yourself?
No, I have somebody that helps me with that.
Yep.
And but on occasion I've done it before.
Yeah.
Right. I try to have other people do as much as possible rather than me do it, because that allows me to do other things. Right.
Right.
I can be on this podcast. After this, I can go work out for 2 hours and then I can, get on some calls.
For sure.
Right. So if I'm in the day to day, then I can't do that. Right. I think making sure to have the right team around you is the most important part.
So how did you build that? Let's talk about under the hood, the mechanics. Do you want another drink?
No, I think I'm okay.
You're good?
Yeah.
Okay, we got lots. So your team, how did you transition from, okay, I'm Quentin, I'm the guy doing the doing, right? We're doing the duplex thing. Now we're buying buildings. Now we've got a huge portfolio that you physically couldn't manage yourself, even if you wanted to.
Right.
How did you transition and make that jump? And then what does that business look like today under the hood?
So it depends on where you're looking, right?
Okay.
So if you're looking in the Durham region, I have a property manager, I have an administrator for office, and a maintenance person, and then I have some subcontractors,
Yep.
right? And those people all help to manage the portfolio in the Durham region. So that's like, let's say 2.5 people. Okay. And then subcontractors.
2.5.
Yeah.
Like
whatever half a
2
person
people
is.
and a dog.
Yeah. Just a half a person.
Yeah.
They only have the top.
That's right.
In Northumberland, I have a third party manager.
Okay.
Right. Because I think we have like 35 or 40 units. Right. So it doesn't make sense. We could bring that into Durham and do it. But right now we're continuing to do what we've done before and have that third party management. The rest of the province where we have buildings, we have, I'm a partner in Shoreline Property Management, which we're vertically integrated with all of those buildings.
Right.
And so I think we have 10 staff, something like that, within that, and manage
And that's
800
like
units.
Management, construction, that kind of thing?
Yeah.
800 units.
800 units
Wow.
under that umbrella.
Yeah.
So it just depends on
Have
where
you cracked
we are.
1,000 yet? Are you over 1,000?
No, we will be though,
Yeah.
with a couple more acquisitions that we're doing. We'll
Excellent.
build probably by the end of this year.
Awesome.
Yeah. So I mean, like it all just depends on where it is, and then that depends on the number of people that are involved in the process.
Yeah. Interesting. So then when you grew that and you took that from where you were to where you are now, any growing pains to get there, or was it relatively stable?
I want to say that there was some mindset shifts that happened all throughout the process. I took too long to hire. I should have hired earlier. It was a big mistake. I wish I would have hired on-site property manager sooner. I wish I would have hired not an on-site, but like a
Live-in super kind of thing?
No, like a property manager to manage the district, right? I should have hired an assistant sooner. I should have gone bigger sooner. I should have gone into apartment buildings much sooner and larger apartment buildings much sooner. Right. So there was a lot of mindset shifts. I think I should have added a 0 to the number of the size of the deals that I was doing sooner.
Yeah.
Right. I was focused on $1 million deals and I should have been focusing on the $10 million deals. Right. So adding a 0 was a mindset shift. And being able to, I think those are all things that affected my growth over time. Has it been easy? No, there's been lots of challenges for sure. Have I done well? Yes, I've done well. I mean, honestly, I retired from being a teacher in 2014 and I could have done nothing at that point because I had the income to be able to live and enjoy myself and
based on the existing portfolio.
Based on the existing portfolio at that time. I only continued to grow from there, and I probably at like 5 times whatever that was from a cash flow perspective, maybe 6 times whatever that was. And then from a net worth, like it's not even close.
Comparable.
Yeah.
So where do you find the edge in the business right now? Like, how do you find these buildings? Like, these are big buildings. They don't just pop up.
Yeah, it's relationship building, knowing brokers, being able to follow through on getting things done. relationships with financing, relationships with people, right? Like people get to know you and trust you. And my reputation is very important to me. Like
you only get one. You only get one,
and it can get ruined pretty quickly.
Yeah.
You hear, you and I can chat, but there are people who have bad reputations in the business, and it precedes them, right? People know like they screw their investors. They do this, they do that. Like
I can't imagine being like actively saying, okay, this is the route that I'm going to take. I'm actively going to not pay a partner. I can't even imagine being in that position to say, yes, this is what we're doing. It blows me away.
Yeah. And that's the problem, right? They are not able to communicate where the issue is because they don't know how to communicate about this person caused this problem.
Right.
And we need to let other people know, because if that happened, then they would be out of business. Right. So there are lots of challenges, I think, out there that I've gone through in order to get where I am. If it were easy, everyone would do it.
That's
right.
That's right.
But I spend a lot of time, doing the things that I do, right? Developing relationships, talking to brokers. I was talking to a broker on my way up here.
Yeah.
I've continued. I've got quarterly reports to go out to joint venture partners that are going to be going out this week. So that's all got to make sure that everything's the way that it should be, show what progress we are in our business plans. And we have tons of different business plans going on.
How many hours a week do you work?
I would say
average. If you average out 12 months.
Oh, I don't know. Like
not the Machu Picchu's in the summer and not the, Christmas break over the winter. Like if you average it out.
Next week, we're going whitewater rafting for the week.
Oh, cool.
I don't know. I would say that the majority of my time is probably spent on Derm REI.
Really?
And it's probably not the highest. I hate being. It's not my highest and best use, but it's something that I'm passionate about because I was a teacher. I still am a teacher. I've got a master's in ed. That's my thing, right? And I enjoy that piece. But on my business itself, I would say I probably spend maybe 2 or 3 hours a day at the very least, sometimes more, on that business during the week. The weekend, I'm usually at baseball, things like that. So I would say maybe 2 or 3 hours a day for sure. Now this is where is this considered business? Let's quantify that.
Well, or specifically no. I would say specifically no. So if you get up in the morning and you hit the computer and you're sending emails and you're buying houses or buying buildings, you're controlling the managers, you're talking to people, making sure your projects are heading in the direction you want. That would be business building. That would be, an active component to it.
Yeah. So I would say on average 2 or 3 hours a day. Some days I'm working 10 hours because we've got projects that are I've got to take care of. We've got, issues that we're dealing with. We're going out to do due diligence on a building. That's a whole day, sometimes 2 days to do. So it just depends on what's going on.
Yeah.
But if everything is if we're not actually acquiring something, and I'm not raising funds for a project, then I'm probably 2-3 hours, just working on the portfolio and the business plan that's there. Right.
That's amazing.
I don't know any different. I've tried to create a structure that's how I do things because that's how I want to do it. We've used, it depends on where the portfolio is, right? A majority of those units are managed through our shoreline property management.
Right.
And that shoreline property management has 800 units, right? In that property management company. Not all of those are mine.
Yeah.
Right.
Yeah, I get it.
Right.
So how do you break that up? Do you only focus on yours? If you're portfolio building, do you say, okay, I'm only going to focus on my 400? Or do you strategize the building as a whole, even though you only own a portion of it?
So I'm focusing on the projects where I have partners that we've brought in in order to complete a business plan.
Got it.
So I'm focused on the 400, right? Isn't that a movie? The 400?
300.
Oh, 300.
The Warrior movie. Yeah.
This is the real estate movie.
We stepped
the 400. So the other 400 part of the property management company is just part of the business that's ongoing. With
Got it.
Yeah.
Got it. Okay.
Yeah, so yes, I'm focused on that. The 400. That's part of the the portfolio.
Yeah.
Yeah.
Do you carry a lot of leverage?
If you look at my portfolio, my leverage has increased over the last couple of years because we brought on a number of properties. So I would say we're looking at our portfolio, it's about 60% LTV.
Excluding investor debt. That would just be like bank financing.
Yeah, bank financing.
Right.
Yeah.
So then whatever the investor comes in with, however they get those funds is up to them. Like whether they pull it from a line of credit or they take it from cash. Or
I do not like people bringing lines of credit.
Really?
I ask them.
Okay.
I don't.
Like, where's your money coming from?
Yeah. And occasionally, if the person is sophisticated enough and they're already an accredited investor and they want to pull it from a line of credit, sure. If they're like a family member or a close friend, and I can coach them a little bit through the process, then perhaps I'll let them use it. For the most part, I would say if you're telling me that you're getting it from a line of credit, I start to shut down.
Really?
I start to be like...
Is that because you feel like interest rates will sway their judgment or good judgment in the future? Or why is that?
I just feel that there may be some challenges to be able to continue to invest with you in the future. And they're probably not part of my target, who I'm looking for, right? I'm looking for people who are business owners, often busy professionals, who are doing very well in their day-to-day, and they have the money that's set aside. They just don't want to invest it in the stock market, and they want double-digit returns, right? That's who I'm targeting to help. And if they're pulling from a line of credit, typically they're not in that boat.
Interesting. They don't have the cash.
No. What I want to do is help them to utilize their cash in a way that they get those returns, right? And and that's what I do. And I found that I can do this better doing apartment buildings than I could in the 1 to 4 unit space, because you have to worry about financing, deal with banks, then you got to worry about who's getting the financing. And with apartment buildings, they look at the building, they'll look at my net worth, and then they'll look at the partners and who's involved in the project, right? And they see my track record, and
and they're like, cool, this guy knows.
Yeah, let's go.
If you're going to carry 60% debt, that would mean you're not conventionally, or you are conventionally financed, or
you got to remember some of my other parts of my portfolio are bringing down my total loan to value, right? Because I'll have some properties that, particularly the 1 to 4 unit space, that are bringing down the loan to value because there's so much equity that's available,
and you can't get it back.
And you can't get back. It's the part of it's okay because I've got like a triplex that cash flows something like $1,800 a month, right? Fine,
great,
okay?
Cool.
It's not a great use of the equity that's in there, but like I'm good with that because I get I'm doing that. Just like those 3 properties together will be more than enough for me to live off of, and no matter what anything else happens. Right?
Would you look at a base level of cash flow first to support your lifestyle, and then say, okay, everything else over and above that, let's keep that on the equity side because it's going to grow faster than the little bit of cash flow that I need? Yeah. Like, would that be fair?
Yeah. So I probably leave in most of my cash flow in my business rather than take it. Right.
Sure.
So especially in all the corporations, I'll just leave it in there. Right. It doesn't make much sense. Everything kind of stays in the business. From an equity perspective, the equity continues to grow tax free, which is like a benefit of owning equity.
Yeah.
The challenge is, what's going to happen and when, right? Like, I continue to want to grow, and I have no plans on stopping in the next 20 years unless something were to happen to me to make me stop.
Right.
Right. And I can't predict the future, but I also can plan different things to help me to do that. I can take on partners that and work together with people in order to grow a bigger thing that's bigger than both myself and a partner.
Yes.
So that way, if something were to happen to me, my partner can continue on with the business. And can continue on with it. That's where a fund model kind of comes in, where you have a compliance officer, a financial officer, different other components that can help to outlast.
Cost of compliance really grows, as you grow.
Yeah, it does.
Yeah. Have you thought about that? Like, if you grow to a certain point, it's less profitable than where you previously might have been at because of the cost of compliance and, management and all this stuff?
Yeah. And it actually, that's one of those things that kind of keeps me awake at night, because it's one of those things where, yes, I can grow, but the cost of growth is actually, it actually makes more sense to just keep what you have.
Keep it efficient as to
and
where you're
just
at. Yeah.
make it more efficient, and then hold on to it for 10 years.
Right.
Right. If I'm at 125 million
Yeah.
and I hold it for 10 years, what is it worth in 10 years?
Maybe 30 million more than what it is today. 40 million? I don't know.
Well, we got to remember,
Like you got the pay down. So, okay, sorry. I was thinking pay down a loan. If you're going to pay, I don't know, 30% of a 30-year mortgage, it's like 10 years worth.
Okay. All right. That's fine.
Yeah.
But look at it from a value perspective,
Yeah.
of the, like we just talked about in Oshawa, you're buying it for 300, 10 years later, it's worth 900.
Yeah.
If I have 125 million in assets
Yeah.
in 10 years, let's say conservatively, we are at maybe like 250 million in assets.
Yeah.
Right. So not having to do anything and achieve the same result is a very,
And the pay down in the meantime and the cash flow that it spit off.
Yeah.
Yeah.
Right. So it's very possible to do nothing at this point.
Can we do another podcast in 10 years when you've made 125 million on your 125 million?
Well, yeah, fine with that too. But I mean, I'm looking to grow what we have right now to another 125 million.
Yeah.
Right. And, I'm a goal-oriented person. That's in my personality. So it's just how I do things. Like, I did Machu Picchu with my son, really enjoyed it. Now I want to do Kilimanjaro.
Ah, cool.
So
didn't Mandy do Kilimanjaro?
Yeah, she did. Yeah. So I'm going to talk to a few people that I know have done it and get some experience shares, because 65% of the people that do Kilimanjaro will finish it. Well, I don't want to be part of the 35%, right?
Yeah.
So I'm going to do whatever I can to prepare myself to be able to do that, right? So, and it's just my personality. I'm goal oriented. I want to keep going. People always, how come you're still doing this? How come why are you doing this? Well, I enjoy it. This is what I enjoy doing, right? And to me, if you're doing something you enjoy, isn't that what life's about?
That is what it's about. It's obviously, at this point, it's not about the money anymore. Although the money is a scorecard, right? It's not about the money.
No.
Because you could just sell it all today and buy all the McLarens you wanted, but that's not what it is.
No.
Right?
And I don't even want a McLaren.
And there you go, right?
But I mean, and it all depends on what you want, right?
Yeah.
And if that's what you want, that's great. For some people, it's about, flying first class.
Yep.
For other people, it's about owning a jet that you can do and take wherever you want, right?
Yep.
It just depends on what you want out of this life, right? And if all of those are the things that you want, then, you should go out and work to be able to achieve those goals to help you to do that. For me, I have more aspirations about growing the real estate portfolio than I do about buying
the fancy things.
Yeah, doodads.
Except for the watches. Those can stay.
Yeah,
those can
something.
stay.
Yeah, I've got a couple. So
do you write about some of these goals in your books?
I do. How to achieve the goals is the Action Taker Real Estate Investing Planner. But I don't reflect on my own personal goals in the books, because I want people to achieve their goals, right?
Do you use those books and those tools for yourself though?
Yeah. Oh yeah. The planner I have, so the action planner, I work on quarterly plans. I have 10-year goals. I do a weekly plan every Monday night and Wednesday night. All the templates are in there. And I talk about how I've been able to achieve my goals using the templates.
Cool.
And the books are a way for me to, particularly the last few books, are a way for me to be able to pass on my my knowledge to my kids and let everybody else benefit from it. Yeah. Right. Because one of the things that I wanted to do, and I just took the Finding Properties Toolbox book. I did an audio version of it.
You did?
Yeah.
No way.
Yeah. And
can you get it on Audible yet?
Not yet.
Not yet. It's coming.
It's coming.
Cool.
But I wanted my kids to be able to hear my voice in the, and then I put some extras at the end of every chapter because I was reflecting on what I was doing.
It's the best when you hear the author that actually wrote the book, which you do. You write your own books, right? Yeah. It's the best when you hear the author's voice because it's authentic that way.
Yeah. And, and I figured that if my kids could hear my voice from the grave,
that's right. Weird. You're going to haunt them forever. Right.
But if they ever want to do this, I want them to do it right. And I want to provide them like an education to do it. So that's the whole point of all of the things that I've done to this point, you know, is provide structures and frameworks for people to use that have worked for me. And if you want to see if it works for you, you go to Amazon and pick up a book and try it.
Yeah.
Right. But it's the cheapest way to do it.
Oh my gosh. Books are the most effective, cost-effective form of coaching. Yeah. Right. You can do it on your own time.
Yeah.
Take it anywhere you go. Right. Take it with you while you travel. Go anywhere and like read all of your great content.
and yeah, exactly. And for the other piece for me is that now I have these things that I can pass along, you know, and they do. I mean, there is some income that comes from it, not a lot. You're not going to make unless you have a bestseller. You know, I think I probably get like $500 or $600 a month that comes from the books. It's not life changing, but it is a way for you to be able to pass along your knowledge to other people and just be able to share with my kids if they ever decide to go down this path. My two boys, like, hey, like, you want to learn it?
This is what it is.
This is what I've done.
Do you think you've got more deals because of your books? Like, have you used it like a business card?
I think on the property management side, I think it was very helpful, particularly in the 1 to 4 unit space, because I laid out what I was doing, and you can buy the book, do it yourself, or you can let me do it, right? And so that I think has been helpful. I think it's been helpful from an authority perspective. I mean, I've written 6 books, like.
Yeah, you're a book factory. Yeah, you're a machine
on real estate.
On real estate, yeah.
You know, I think I know a couple things.
One or two things, yeah.
So I think that it helps with authority. Yeah. And then also for me, it helps me to stop answering people's questions who ask me the same things over and over.
Read the book.
Yeah,
read the book.
Property management. Did you see in chapter?
Yeah,
in the
so and so.
Right, and then you have this question about joint venture. Well, have you read the scaling up? Right, so like now it just helps with me answering questions rather than me having to spend 15 minutes of time with somebody who's just there to try to pump me for information. Right?
I ended up buying Scaling Up Toolbox. I bought one. You had sent it out through like an email blast. I'm like, oh, cool. I'll get his book, right? So I bought one, and then I guess somehow that email got marked as unread. And it disappeared for 3, 4, 5 months. Right? And then I clicked on it again. I was like, oh, I guess I haven't ordered. So I ordered it again. And now I have 2. I have 2 copies of the book.
Well, you can give it away for something.
I'll give it away. Yeah, I'll give it away.
But that's a great book for people who are wondering how to scale their portfolio and bring on partners and just how that all that kind of process works. Yeah. And kind of stay on side with the Securities Commission, right? Because you see a lot of that messiness happen too. There's
a lot going on in the market right now with stuff like that.
Yeah. So and there are people that are not doing it properly, and there are some real chaos. Like you know, so you gotta watch.
And that was in a great market.
That was in a great.
That was before the market stopped or started to fall. Yeah. Right.
Yeah, and then now we're going to start to see some different things happen.
What does Warren Buffett say? When the tide goes out, you see who's swimming naked.
Yeah.
Right.
So that's
it's like that.
Yeah, absolutely, it is. So we got to watch to see what happens. But as a real estate investor, I'm looking for it as an opportunity, right? So what's the opportunity that's available here for me to take advantage of in this type of situation?
For sure.
So. That's what I'm going to do.
Is there anybody else that you'd recommend to come on the show?
Oh, I know lots of people who would be good. Particularly, depends on who are you looking to focus on, like 1 to 4 units or commercial.
Something with scale. So all highest and best use related, like land, structure, maybe a developer.
The best guy I know to do that is Richard Summers. You know, he did the Janosh conversion to 90 King Street, and you know, just all around creative guy.
Yeah, he's a nice guy.
Yeah, ADD, right? I don't know how you're going to get him to sit here for more than 5 minutes, but he's a really smart guy.
I heard maybe this is folklore. I don't know, but I read an article that he was building a bridge to link a parking garage to a condo in Oshawa.
Yeah, that's the 80 king or 90 king.
Fantastic. I love it. I want to talk to him about that for sure.
You know, he's a great guy, especially if you're looking in that space. The Wyritts would be good, right, for looking at scale as well if you're looking for bigger stuff. My partner Andrew Brennan would be good for you know, talking more about apartment buildings. And
we should get him on speaker right now. Andrew, Andrew, where are you?
Bring your McLaren.
Let's go.
We can do this thing with your Ferrari and the McLaren. Right. So, but yeah, so those, if you're looking on the scale side, definitely that. I think if you're looking in the 1 to 4 unit space and you're still looking for highest and best use, Andy Tran would be good for.
I spoke with him the other day. Yeah, we're going to get him on.
Yeah, he would be good. Or if you're looking for like, what are people doing locally? Dan Hogeberg.
Yeah. He was one of my coaching students.
No way. Yeah. Yes. And he's got the like 3 garden suites going on in
killing it right
in
now.
Clarington.
They're doing very well.
Yeah. So I would suggest him too to come on and
idea.
talk a little bit about what he's doing.
Yeah.
And then in just, you know, people like, there's a lot of different people. I would suggest you stick with people who are doing and not had done.
Yes.
Right. So that's the key, because everything changes. Like the whole, now I'm looking back at every property I have and go, can I put a garden suite there?
Yeah.
How about there?
Yeah.
How about there?
Yeah.
Right. And so there's that's the type of inspiration that helps you to get, you know, higher density, you know, and increase that ROI, whatever you're getting on the project, right?
For sure. Yeah. Awesome. How can people find out more about you?
If you're interested in looking at a project together, QuentinD'Souza.com or PassiveInvestor.com.
Wow.
.ca or I don't know, something. Like
Google him.
Yeah, Durham REI, though, if you're interested in education around learning about investing. So DurhamREI.ca is a good one too. And I'm on social media everywhere. So Human REI on Instagram and Quentin D'Souza on LinkedIn.
Awesome.
Yeah.
Thank you for coming on the show.
No problem, Ryan. Thanks for having me.
Thanks again for listening to the Highest and Best Use podcast. And a reminder to sign up to the book at thehighestandbestuse.com. I'm your host, Ryan Carr, reminding you that good deals are found, great deals are created. Like, follow, share, subscribe, and we will see you on the next episode.